Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden secrets of corporate filings, and today we're diving deep into Palantir Technology's latest annual report, which shows some truly massive growth almost too good to be true. So let's find out if it actually is. Palantir brought in an impressive $4.5 billion in revenue in 2025. That is a huge leap of 56% compared to the previous year. It's like they almost doubled their sales, which is pretty wild. Looking at where that money came from, 54%, so a little over half came from government clients, that is $2.4 billion. And the other 46%, which is $2.1 billion, came from their commercial customers. It's interesting to see that their commercial business is growing even faster than their government business, up 60%. This shows they are successfully expanding beyond just government work. And get this, the big clients are spending way more. The average revenue from their top 20 customers in 2025 was $94 million. That's a massive jump from $64 million just the year before. This means their most important clients are growing their relationships and spending a lot more with Palantir. Now here is something that really catches the eye. Their total remaining deal value, essentially the money they expect to get from existing contracts, jumped to $11.2 billion. That is more than double from last year. This suggests a very strong pipeline and a lot of anticipated future revenue. It is like they have a crystal ball for future sales. But let's talk about how they're making money. While revenue is soaring, their operating expenses did go up too. A big chunk of this relates to stock-based compensation, which was $684 million in 2025. This is a significant cost, and it is important to remember this is a non-cash expense, but it still impacts their equity. When you strip out that stock-based compensation and what they pay in payroll taxes for it, their adjusted income from operations was $2.2 billion. That's a pretty healthy number, showing they are making good money before these non-cash items. Their gross profit, which is what they make after paying for the direct costs of delivering their services, was almost $3.7 billion. That is a really high gross margin of 82%. This means for every dollar they earn, they only spend 18 cents on direct costs. That is a very efficient business model right there. Now, even with all this good news, there are always risks involved. Palantir itself points out that their stock price could be volatile, and that a few big customers account for a lot of their money. This means if one of those big clients decides to leave, it could really hurt them. They also admit that their sales cycle is long and unpredictable, and that developing new technologies like AI is a major challenge. Speaking of AI, they are heavily invested in it with their AIP platform, but they acknowledge the risks like AI algorithms being flawed or datasets being biased. They are also aware that improperly used AI could lead to reputational harm or legal trouble. So while AI is a huge opportunity, it is also a significant area where things could go wrong. Their sales and marketing expenses went up by 19%, reaching over $1 billion. This shows they are investing heavily to get new customers and keep existing ones. This is typical for a growing tech company, but it's a big number that they need to manage carefully to ensure it leads to profitable growth. On the investing side, they bought a lot of short-term US Treasury securities and privately held investments. This used up a lot of cash, $2.8 billion, which is way more than the previous year. It seems they are being very strategic with their cash reserves, perhaps looking for growth opportunities or securing their financial stability. Palantir is also very serious about cybersecurity. They actively assess and manage risks, even bringing in outside help for reviews. They also provide employees with training on security and ethical practices. This is crucial because a data breach could be devastating for a company that handles so much sensitive information. Looking at their stock compensation, they have a lot of outstanding stock options and restricted stock units, or RSUs. These are basically future promises of stock given to employees. While this is a common way to attract and keep talent in the tech world, it can also dilute ownership for existing shareholders if not managed well. Interestingly, there was a lawsuit filed against Palantir and some of its top people related to claims of misleading statements about their business. While the company seems to have won that particular case in April of 2025, these kinds of legal battles can be costly and distract from the core business. So, what is our take on Palantir's 25 performance? On the one hand, the growth is absolutely phenomenal. Revenue is soaring, their customer base is expanding, and the future looks very promising, especially with their big bet on AI. Their profit margins are incredibly strong, which is a great sign of business health. However, they are pouring a lot of money into sales and marketing and investments. And the risks associated with AI and customer concentration are real. They are clearly investing for future growth. But investors should keep an eye on how efficiently they manage these expenses and how they navigate the complex world of AI and data privacy. It's a company with immense potential, but also significant challenges ahead. Alright, that is our breakdown of Palantir's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. And don't forget to join our Discord community, linked down in the description, for even more exclusive content and discussions. Thanks for watching. See you next time.